Right, welcome, by the way, into our exchange here. This is a posh place where everyone hangs out. Got some great speakers lined up for you. And the next speaker is another genius to share with you all the things you need to know. His pedigree is quite impressive. Previously with Ripple and AWS as a as a director for APAC and MENA. And today he's the global head of business solutions and advisory for Fireblocks, which is very exciting. He's going to be sharing with us delivering digital asset projects with tangible outcomes, one block at a time. I see what you did there with the title. Very good indeed. Put your hands together for Sagar Sarbhai. Give it up. Clap. You got to clap. We're on YouTube. They're all watching.
I've been called many names, but not genius before. So thank you for that. I don't think I'm a genius, but I do think there is a presentation. Is there a presentation? So look, by the time they pull up, let me tell you a story. So yesterday, I landed. I'm based in Singapore. I landed in Dubai about 2 days ago, and I was meeting a former colleague of mine, and he said, "Sagar, you have been in this industry for the last 7 years, and you've been coming to Dubai. You've been covering MENA for the last 7 years, and I've been hearing the same story: blockchain, financial inclusion, blockchain, ESG." Blockchain, tokenization. You were doing tokenization in 2016. I'm still not seeing mainstream adoption or traction. What's going on? Is it all a fairy tale? Or is blockchain still a hammer looking for a nail? Why am I not seeing traction? Is it all going to fizzle away after FTX and Terra Luna? Is Bitcoin going to zero? Is it all going to end? And I said, look, relax. I know you're a blockchain skeptic, but this is all going as it should have been. It's a classic innovation curve, and we are going through that curve. I basically told him, if you look at the evolution of the internet was founded in the 1960s when ARPANET and all that happened. The formal birth date of internet was 1983, January 1. And it took the internet more than 15 years to get mainstream traction. We are still only about 11 years into the Bitcoin white paper, and I would say 8 years when the blockchain technology went mainstream. So in today's session, I'm going to talk about the evolution of the space and give you a crystal ball view of what we feel is the future of the internet and how blockchain and digital assets can really be used to empower the next wave of innovation. Cool, so I know we have spent 2 minutes on the background story, so let me jump straight into it. So I told my colleague who happens to be a blockchain skeptic that, look, this is all going as planned. This is part of the classic innovation curve. And basically, over the last 10 years, we were only in Horizon 1. We are now entering Horizon 2 of this brand new innovation cycle. So what happened in Horizon 1? So in Horizon 1, there were many trial and error experiments. Of course, the crypto natives, the exchanges, the market makers hogged the limelight with a lot of speculative use cases of cryptocurrencies. That still remains the number one use case of blockchain digital assets. But at the same time, there were a lot of experiments and innovations happening on the payments front. So people were using Bitcoin, ETH, XRP for payments, for cross-border remittances, and so on. Banks were in the early days of tokenization. So I remember I used to work for a bank, and we launched a tokenized corporate bond in 2016 in Africa. And there were many such experiments. If people familiar with R3 and IBM, they were the talk of the town about 7 years ago. Unfortunately, those projects never saw day of the light because of some underlying issues. So for example, there were no layer 2 solutions, there were no scaling solutions, there was no Fireblocks, there were no mature infrastructure providers. More importantly, there was a big gap around liquidity. The big boys, the big FMIs, clearing houses, exchanges were not jumping onto the bandwagon. That is now changing. Which is why I like the term tokenization 2.0. We are entering into a new phase of tokenization and digital assets, which I will talk about now. So we are now entering Horizon 2, where if you look at every segment, they are looking at digital assets blockchain. So from financial markets who are looking at tokenizing financial instruments, real world assets, real estate, so on. You look at corporates who are launching turbocharge new form of doing commerce on Web3 using token gated mechanism, which I will talk about briefly. We have a payments company looking to use permission DeFi and digital assets in a combination to do cross-border payments or interbank wholesale FX. But most importantly, this is the first time in the history of digital assets where we are seeing the mature FMIs, the exchanges, clearing houses, entering this space and saying, okay, now I get it. I know that this is the next big thing and I want to make market into it. So you're looking at exchanges saying, and I'm talking about the traditional exchanges, the CMEs, the LSEGs of the world, they are stepping in and saying, I will make market in these tokenized assets. And that to me is the turning point for this industry. Now you join that with what's happening on the CBDC side, where you are also looking at tokenizing fiat. Not just CBDCs, but also a bunch of banks looking to issue tokenized money, either in form of stable coins or tokenized deposits. And when you combine the two, that creates a beautiful flywheel effect where you can look at very interesting delivery versus payment mechanisms or atomic settlements on chain, real-time settlement, T+0, so on. Horizon 3, which I believe is 4 to 5 years from now, I see, and this may sound like a cliche, but we do believe that 10% of global GDP will reside on the blockchain. More and more players will jump onto this bandwagon. There will be permission DeFi pools for assets. There would be tokenized fiat. There would be tokenized real-world assets. And we will start to look at interoperability. Right now, that is a big issue. But even as we speak, there are people solving for those problems. So that's where we see the future of the internet. And I purposely use the word internet and not digital assets or financial instruments, because this is not just financial institution, but this is across the spectrum. Now, what is driving this? What has changed now? So I think there are three major factors. Number one is, again, may sound like a cliche, but favorable regulations. And not just the individual national regulators coming up with regulations. For me, the most important point, which is not often talked about, over the last 2 months is the first time in the history of blockchain digital assets where the global standard setting bodies like Financial Stability Board, IOSCO, FATF, they all now have come up with guidelines for digital assets and cryptocurrencies. This never happened before. And if you go back into time in the post-2008 financial crisis, these were the guys who basically came up with guidelines and changed the entire landscape of financial services, specifically OTC derivatives. So the fact that these guys are coming up with guidelines means that they are serious about this. And if you followed the news 2 months ago, the G20 summit ended under the leadership of India. And if you read the G20 communique, it mentions that the G20 will work together with the FSB, with the ISCO, to come up with global set of guidelines and regulations. Secondly, participation of institutional players. We are seeing more and more mature players, the large banks, exchanges jumping onto the bandwagon, and then that brings in more stability, more trust to the industry. Last but not least, we are seeing opening up of new markets. Obviously, MENA is probably the hottest region right now. I would say it's a fairly new market that has opened up, but not just UAE. We have Turkey, Egypt, there's a lot of adoption, Bahrain, Kuwait, Qatar, even as we speak, they're working on creating new regulations. So all in all, I think it's a massive positive for the industry, and I think we'll see a new wave of innovation and adoption coming forward. This is just to give you a sense of the opportunity. I mentioned that 10% of global GDP will reside on blockchain in some shape or form. So the big circle that you see here is the total addressable market. The small dot in blue that you see is how much of those assets have been tokenized today. And the middle circle is the opportunity. So I am very bullish on fixed income products. I think that's a low-hanging fruit. A lot of banks, exchanges are looking at tokenizing bonds and carbon credits and green bonds, because that's a low-hanging fruit where you can start getting immediate benefits. Tokenization of fiat, again, central banks looking at CBDCs, banks looking at stable coins, tokenized deposits, and so on. Massive, massive opportunity there, and I think that starts to create that flywheel effect for the industry. Sorry, I'm running because I know I'm short of time. So This is just to give you a sense of the interesting use cases around tokenization specifically that we have seen over the last 18 months or so. All the logos that you see are Fireblocks customers. We are working on some very exciting projects. So for example, on the ESG side, we are working with a bunch of companies, banks, PE companies, helping them tokenize carbon credits because we feel that is one market which, again, that could be a killer use case for digital assets and Web3 and blockchain. Financial instruments, we are seeing, as I said, tokenization of fixed income products is a low-hanging fruit because, again, there are immediate value add that you could reap as a bank or as an exchange. Last but not least, digital asset payments. So the top PSPs, the top payment providers on the planet are looking at digital assets. So for example, we have Checkout.com, WorldPay as our clients and partners who are looking to enable their merchants to accept payments in stable coins and cryptocurrency. We're also working with Visa and MasterCard on a bunch of initiatives. And the fact that these giants are entering this space means that there's a lot brewing under the scene, in spite of the fact that the crypto market in terms of market cap is probably at an all-time low. This is slightly shifting gears. This is more on the corporate side of things. So we also believe that not just BFSI or crypto, but also on the retail commerce, I think Web3 and digital assets is making a massive impact. We are working with some retail giants that the top 50 companies on the Fortune 500 list are all looking at Web3 and digital assets as in terms of their core strategy. And the most unique use cases which people here may be familiar with is around token gating. Now, what does token gating mean is basically you embed a lot of value in NFTs and create a new experience for your customers and also for the brands that you are partnering with. And that almost creates a flywheel effect between the customers and the merchants. The customers get empowered, they can get rewarded in terms of NFTs or loyalty tokens. And the merchants, in terms of their benefit, they obviously create this community effect. They build a more powerful relationship with their customers. And most importantly, they're able to replace the concept of cookies with NFTs to get data and have a more targeted marketing campaign. I'll just take 2 more minutes to walk you through a case study. This is a project that we did with an e-commerce company in India called Flipkart, the largest e-commerce company, now partly owned by Walmart. So they came to us about 18 months ago, and we worked on multiple ideas, but we settled on this token-gated experience, which was one of its kind globally back then. So what they did was they partnered with a mobile company in the UK called Nothing. A lot of you may have the Nothing mobile phone. Nothing wanted to launch their mobile phones in India. So what they did with Flipkart was they partnered with Flipkart, minted NFTs, and airdropped those NFTs into selected customers' wallets. Now, any customer who had the Nothing NFT got first access with a 20% discount on the Nothing phone when they launched the phone during Diwali of last year. Now, what that creates for Flipkart is an opportunity to create this exponential revenue opportunity where, because let's say now I'm Samsung, I want to launch the Galaxy S24 next year into India, but I want to see how many of Flipkart customers hold a Nothing phone, and I want to do a very targeted marketing campaign only to those customers. So Flipkart will basically open up the public keys of those customers, and I, as Samsung, will be able to see how many of Flipkart customers hold a Nothing phone, and then I can offer them incentives and other campaigns. Now, tomorrow, let's say if a headphone brand, a Sony wants to enter India, launch a new product, they can then see how many of those customers hold the Samsung NFT or the Nothing NFT or the Starbucks NFT and so on. So that creates a beautiful flywheel effect. It empowers the customers, it empowers the brands, and if you're a platform provider like a Flipkart or a Shopify, you also get a massive revenue opportunity here. So I know I'm out of time, but thank you very much for your time. Happy to take any questions maybe outside. Thank you.